Hello and welcome to Stocks Advisors channel. In today's episode, we will talk about Tuscan holdings traded at Nasdaq, nickname THCB. Well, usually we don't discuss these stocks, so-called sub-billion stocks at our channel. But in this case, it's quite interesting setup. Therefore, we decided to talk about THCB, and this is about 383 million market capitalization company at the moment. So first of all, what is important to note, if you look really at the bigger scale, there is a clear, let's say, solid trend level, you can say, which is around 10 plus minus, which worked also as a support line in May. But now it seems like we're going to pierce it downwards. And why we think so? Because you can clearly see here, after having a long-term descending channel formed in from February all the way to April and piercing it higher, this worked actually as a classical one. You can clearly see here we actually, well, if you would imagine continue this line, we bounced on it. Let me draw it again. So we bounced on it here. You would imagine continue this by May and then started to go higher. But instead of really confirming the high, moving average, let's say the breakout, moving average 200 worked here as quite, let's say, decelerator. And after trying to go higher from moving average 200, didn't succeed and again declining, forming another channel. If you look here, looks like we're going to form another channel because here you see two times by beginning of June, and today we touched the top. So it looks like we did form the top, and the bottom was formed by mid of July. So no June, by July, of course. And then looks like we're going further, and we might even form a more accelerating descending level. So what does it mean? It means that, generally speaking, that the situation could be forming here is such that we will do kind of decline, then grow, and further decline even lower, and from there we can have another setup. So it could be kind of skewed W shape formation, generally speaking, and that's what we can wait for, and that's what we can trade with. Also, what might be happening, of course, is a sudden breakout upwards, which we still need to take into account, and we will be let's say trying to get this one. But why I think it will be skewed W shape formation, because if you look at MACD histogram here, after forming a negative wave, instead of recovering, it looks like it's starting to make another secondary wave. So similar to one that we saw by beginning of the year. You see double, although a little bit smooth double wave formation. Similarly, in mid of March, let's say, also double wave formation, which leads to kind of also zigzagging or double U skewed formation here. If you would imaginarily draw it, just to give you an example what I mean, it's this one. So the similar situation was observed here as well, 1, 2, 3, 4, and here we can start another wave, so speaking bigger. And that's why we need to be buying through in order to be ready to enter. At the moment, it's still a wait because it's unclear how we will resolve. So first of all, because it also could be a sudden breakout, we don't exactly know at which point, actually, if you would draw skewed W here, we still don't know exactly at which point this will be forming. So, but we can, let's say, guess it, and we can mitigate our risks on this estimation. So this point, trying to estimate this point by looking at the principal levels here. And therefore, the first level to buy through, of course, if you look carefully, would be a little bit wait and then buy through this level, because this is exactly the level between around 10 and 10.43, where we will be, first of all, at the bottom of the current descending channel. And then we can have at least smaller rebounds, allowing us to make up to 10% profit, or if it will be bigger breakout, we can make even more. So with this being said, we can say that the first technical level where we can buy through will be 10.07 and 10.43. Let's write it here for ourselves as a call out. I will move this one a little bit to the right. So the first call out for us will be therefore let's write it here again. It will be between 10.07 and 10.43. So what do we mean when we say the first technical level? So it's the technical level from where you can expect the most, actually you can see the most expected behavior, the most expected pattern, and this would be at least within the channel rebounds from the bottom towards the top, and this would be that level. So what else could be happening? We could form a even faster descending level, although not really expected, but this still could be happening, or this level, this descending channel could continue further. And then, of course, we need to be ready to buy even lower. In this case, it will be the level which was formed really by the darkest time of, let's say, COVID of 2020 April. It's this one here you can see, and this will be between 9.15 actually and 9.48. So if the channel continues there, then from technical point of view should be really the end of this skewed W shape. So this should be really this point, and then we should have our rebound. So therefore we can write our second call out for this level, and this will be 9.15 to 9.48. So these are two technical levels, so the most expected ones. And if we will be buying, we need to buy through those non-linearly, of course, because if we go to the second level, we want to be as close as possible to it. Therefore, we'll buy more there. We'll talk later how to buy through. And the third one, the third level, it's the level which we discussed at our channel, but it's not expected level. So first two are expected. The third one is not, because it's based on negative catalyst, and negative catalyst is never expected. You never know in which form it will come, but if it is coming, you want to be just sure that you will have some funds to buy there through. And usually, if there is no real principal level, like in this case, to define this, we usually give it, let's say, between 15-20% margin to buy for those levels. And in this case, it will be just between 8 to 8.50 to buy, just a mathematical estimation. And if something bad happens, price really goes there, you don't need to be scared. While others will be exiting, you will just be ready to buy there even more non-linearly. So once the rebound takes place, you will be able to make your most profit there. And as you can see here, we do not talk about any stop loss. We don't discuss this strategy. We just say it's okay to wait a little bit longer. We just buy more and more. We keep funds for that. We buy non-linearly. And then once rebounds takes place, we take it all actually. And that's the way to do here. So speaking of profit, again, it should be quite moderate, although this top of W shape, so really the final goal for those who are midterm traders, could be quite high. It could be all the way at least to 15. So if you are midterm trader, let's say between 13 to 15 would be your goal. But if you are faster trader, you want to take your profit faster and then looking for something else, I would say don't be too greedy. Just do it nice and smart and take the profit from 15 to 20% from the money allocated in the position. So once you can do it, really take it. Do not hesitate. Re-enter if needed, or check other opportunities at our channel. You can find actually many. Even those videos that were uploaded previously up to 1 month still could be fresh, in a sense that levels discussed there, especially if we speak about second or third levels, could be just happening. So you will be in time to buy and make your profit just in time. So if you like this way of trading, where we look at daily candles, the principal levels, where you don't need to be sitting at your monitor all the time trying to follow the trades, don't forget to subscribe to our channel, press the bell button. This way you will not miss our new videos and new interesting discussions for US-based stocks. And before we finish how to buy here, well, buying is quite simple since it's a very classical behavior. It's a 5-portion play. What does it mean? It means that funds you would like to play here, you can split in 5 portions. Then you can buy with 1 portion through the first technical level. If this is not confirmed and we are going to the second technical level, you buy with another 2 portions. And then final 2 portions you just keep in case of negative catalyst kicks in. So if it happens, people will be exiting in panic. You just calmly buy through the third level, and then on the rebounds, you take the most profit. So in this way of trading, actually, you keep more funds to buy in the worst case. And it means that the worst it gets from your first buy, the better is actually for you, although it sounds contradicting, because then you will be able to buy more stocks. But this is not the aim. The aim is to be safe. The aim is to exit from every trade either with a profit or with a draw. So we don't want to take losses. We're okay to spend some time, but we don't want to take losses. This is a little different from stop loss strategy, where you are okay to have losses but gain time because you don't want to wait. But This is more for those who I think trade intraday. For us who are looking at the daily candles, it's better to wait a couple of days, but just take your profit or have no loss. I like it more because I don't like seeing any red numbers on my brokerage account. So if you also don't like it and you like this way of trading, don't forget to subscribe to our channel, press the bell button. This way you will not miss our new videos and new interesting discussions for US-based stocks. With this being said, good luck with THBC and see you at another episode of Stocks Advisor channel.